Welcome, fellow investors. Today we are delving into the world of finance and we will just get through what's going on with Nasdaq. So Nasdaq has consistently held a prominent position as a hub for technology and growth-oriented companies. Right now is going through headwinds with this break out of this pattern that right now may be having some of a more drawdown. So Nasdaq is going through a kind of difficult time. We'll get through the technicals of the index and also some fundamentals behind and what's with earnings that may weigh on the stock index. So as we gather today, we're finding ourselves at a crucial juncture, facing both opportunities and challenges. And let us embark on this exploration of Nasdaq index, weighing the advantages and drawbacks. So right now, as the index is falling, everyone is forecasting that that might be the end of the world. Right now, yes, we are just dealing with a treasury futures positioning at record volumes and all skewed one way to the downside. So that's right here. So we can find that more and more landscape of treasuries is becoming into more dramatic scenario without a hopes for resurgence for now. But as we just have a look at the billow's press note, throughout history there have been constant predictions of catastrophic events like US dollar, America, and other form of government debt crisis. So in the 90s, it was China's turn into the spotlight. While acknowledging the possibility of emerging world powers, it seems too early to dismiss the United States. And for now, particularly in an economic prowess, I do find that there are not many things that may threaten the position of a indexes along with Nasdaq. So if we just have chilled out a bit right now, let's get into the underneath data. The Nasdaq has got a little bit overcrowded with big tech carrying the S&P 500, given the biggest stocks have been responsible for most of the index gains. So that may eventually normalize with this seven magnificent eventually to have a bit of a drawdown. But if we just have a look at the cuisine of the Nasdaq S&P 500 information technology that I just took my data off, investors are banking on big tech companies to boost market sentiment during the upcoming earnings season. But right now, this earnings season is a little bit of the marks when we have many companies been letting down analysts. And even though those companies that were just getting to the expectations right now are also falling due to this overhyped conditions, hyped scenario for many of this AI type of stocks. And AI is this theme just for years, not just for months. That's why we have these realizations of the prices and projections that analysts have made indicate a 34% increase in earnings for the 5 largest 10 companies compared to the previous year. So it should potentially drive a market rally. But right now, as those companies are meeting the expectations but not beating them very extensively, it means that realization is finding to be to the downside. So right now there is a many voices around that this interest rate rise and this inverted yield curve is getting the outlook a little bit more grimy, but if we just have a look at the shorter or medium term time horizon, we may find that there is not many things about to get scary about, and we'll just get about this ripple effect that I just have laid out. Ripple effect that has a earnings season on the stock valuation. So when it comes to earnings revisions, right now we've been at the shy position, but it has increased with regard to the largest companies. So if we just have a look at this right corner's picture, we can find that the earnings per share right now are perfectly been valued aligned with the stock index. So S&P 500 right now is being found to be at the right valuation. Maybe it has, it's about to drop below this average being drawn, but with this earnings revision for an index of stocks getting a rise, it means that analysts and market participants are becoming more optimistic, and that's why we may just get a little bit more into a plateauish tendency with right now this AI hype getting a bit more faded. So we are dealing with positive sentiment, and rising earnings revisions indicate a positive shift, but it may not be sustainable for that long. S&P 500 information technology operating earnings per share right now is also seems to be rising, but after that very much of a hyped first half of the year, kind of a normalization may be expected. So those growth expectations will be kind of difficult to meet, and market performance may eventually suffer out of that outcome. So when it comes to the positioning of Nasdaq, we may find it just here. Maybe let's study through this. So you can find it on the commitment of traders, showing us that on green you have a non-commercials and large speculators that right now has increased their positions right at this lower band of the descending wedge. And if we just have a look at the next one, that's that was a red one. That's a user and swap dealers right now are at the opposite side. So large speculators right now started to buy, but the small is right now kind of indifferent to the index. And when it comes to the lower type of a commitment of trader structure, we can find it with green, that's asset manager, and with blue line we have leveraged funds. So asset managers are right now highly positioned to the upside, so it normally where this normalization should come, and with the type of standing of the leveraged funds, we may or the asset managers, we may have a drawdown to the normalized type of a valuation. So if you just want to study this in another type of a breakdown, you may find here Nasdaq 100 E-mini COT summary. You may just pause the transmission and just study this by yourself. But if we just get to the max point, we are right now at the level that max point is underlying around 14.525 2400s. And if we just get to the interactive chart, I will just show you this one. So right here you can find there is a NDX, so it means that we have just crossed through this point of a max pain, so it means that a greater sell-off might be observed eventually at those valuations. And also, as we have just got through this previous support that's not very strong, but anyway it takes place, we are more predestined right now to get to lower evaluations, even to 13.82. So this max pain indicates that right now we should be heading a bit lower. But for this to happen, I wanted to just guide you through other elements, and that's a dump money confidence. So right now this dump money confidence is decreasing, so it's one thing that also pushing us into the view where we may eventually get a reset on this indicator, and then giving a chance for new buyers to step in, new smart money to step in and find the way for themselves to thrive on this market. But what the chart is saying, so once again, if we just get to Nasdaq right here, I'm just getting you to a weekly chart. So right here it looks like we have found an inflection point with this inverted hammer being set back in July that set the scene for the next few months. And right here you can find that Nasdaq is right now seeking for the floor, and as there is not much of a volume within this barrier, we may just hang along within this barrier of 14.200s, but I do find that there is still greater possibility that we will eventually drop lower. However, for now, I would just stay away from the sell side, as the RSI relative strength index gauge is showing oversold conditions. So we may just expectedly get a kind of a rebound and then maybe greater sell-off in the middle of the next week. So for now, if it comes to a projection where we may stop from here, it will be an extension of the breadth of this channel, and that's at least around 13.5 hundredths. So it means there is still around 5% of a drop ahead. But anyway, we are still above the water in this year. We are above 25%, even up to 30% higher than when we were back at the beginning of January. So even though we are dropping, this return on investment on Nasdaq has been absolutely great this year, and there is no place for grinding with your teeth, even though you have bought recently and keeping the stocks for longer. You will be in a cheer position in the times to come. All right, so we are just jumping to final thoughts and Q&A. So what you will notice from latest charts is that Nasdaq is going through a little bit more turmoil right now, but it went through the extreme rates back in the second half of this year. That's why kind of a chill conditions should be eventually taking place. So there are many growth stocks that has risen astronomically back in this second quarter, and right now this realization eventually take place. However, we are still in the seasonally very good position for rebound, and after supposedly the beginning of November, some kind of a building a structure of floor should be visible. So the average price to earnings ratio of the Nasdaq is a weighted index of the 100 largest Nasdaq stocks by market capitalization, and right now it's around 30. So that's up from 23 a year ago. That's what makes the perspective that we are nowhere near from the kind of a rebound structure, even though the latest sell-off took place. So should you invest in the Nasdaq right now? If you are just buying it for the long run, I do find that there will be an opportunity right at the half of November, and then with the seasonality we should perform much better than it was back in October. But if you are thinking of a short and medium term type of perspective, you may just steer clear unless you are a professional trader and betting on short. That might be an opportunity for you. That's it in today's episode. Thank you very much for watching, and as always, I'm inviting you to visit our channel, Wall Street channel on YouTube, and find out something for you. Thank you very much and have a great weekend.